Yeah, I'm glad Aaron focused on input prices. I don't have any graphs or charts to cover those, but they have a lot to do with profitability in the cattle business. And we're going to hit some high points here. Uh, we definitely have cattle prices that are stronger than what we might have expected, especially on these calves that are freshly weaned calves coming through the market right now. We hadn't really seen a decline in those calf prices as we would seasonally see. Um, we did, from a national standpoint, uh, we've had where drought is influencing heifer retention and slaughter rates, and we'll briefly discuss that. And there are some opportunities for margin operators, whether that be stocker, backgrounder, cattle feeders, um, to make some money. And a driver of this is going to be the international market. So the one big highlight that's happened in the past 2 to 3 weeks is starting to finally see these finished cattle prices really start to make a move. I mean, since April, we've been essentially trading between 120 and 125 since April. That a $5 range for 6 7 months is just unheard of, and I guess nearly 8 months in reality. But we were just locked in this 120 to 125 range, and that really made it difficult for cattle feeders to really want to pay up for cattle. Granted, there were some opportunities that the futures market offered them, um, and so they were willing to pay up for some summer cattle, and we saw that. But then prices didn't continue to move as we would have expected. But finally, we've seen a really strong move in finished cattle prices, and I think this is going to persist, uh, especially when we go into the spring. We do have a chance at hitting, maybe even a $1.40 on finished cattle in the spring. I mean, we could exceed that, but right now that's kind of where I think we're going to be moving towards. I think that's kind of the projection of place to get to. Right here shows these 5 to 6 week steer prices. I mean, it's amazing, how strong they've been during the time of year when they typically are their lowest. Uh, as you can see there, we kind of hit the bottom for the fall, second or third week of October, and since then we've seen prices just kind of tick back up a little bit. Um, I don't see that these lightweight calf prices are going to decline anytime the rest of the fourth quarter. And as soon as we hit January and February, these prices will take right back off. And I think there's going to be strong demand for these lightweight animals to go on spring grass. Right now, I mean, it's a lot of the winter grazing that's supporting prices, and I think it will continue to support prices. Is this a good thing or a bad thing? Indifferent. Um, I don't know that there's anything to say. I don't know that it is. It's good for our cow calf producers that these prices uh, are stronger than what we might have expected this time of year, because you're still, on a 550-pound animal, easily clearing uh, $800, close to $850 a head on some of those animals. And so some in this year, in 2021, some people will be making some money on these animals. So that might drive some more heifer retention as we look forward. From the 7 to 8 weight or more yearling type cattle, this is weekly auction run cattle, but it still gives you the same price direction as load lots, which is where most of our heavy cattle are sold through. Um, we're going to see these, since these prices are going to continue to escalate, especially as long as the live cattle price or the finished cattle price continues to escalate. So we're going to continue to see these prices on these yearling cattle go up as the finished cattle prices go up. Uh, Slaughter cow prices, not even going to talk about those. We'll move on past them. You know, we talking about where we are and what we've been doing and what's driving these prices. We're coming out of a year in 2020 that was greatly influenced by the coronavirus pandemic. Well, you go back to August of 19 when we had the Tyson fire and the market was disrupted. And just as we thought we were getting over that, well, then all of a sudden coronavirus shows up and influences slaughter rates and the ability to move cattle out of feedlots. And now we're in a situation where, uh, in reality, we could all probably go drive a cattle hauler and make a pretty good living, um, hauling cattle, because we don't have the whole infrastructure bill that is in Congress right now, that was just signed. Yeah, it might build infrastructure, but we have to have people to drive trucks and move product, and so that doesn't necessarily help the whole situation that we're looking at. But anyway, we had that serious drought in the West and Northern Plains, so we've increased heifer slaughter quite a bit this year. Steer slaughter's up, but again, that's relative to some time periods a year ago when we were soft uh, on slaughter. But I do think what we see here in heifer slaughter and beef cow slaughter is that come January 1, we're going to have a reduced beef cow herd relative to a year ago, or relative to January 1, 2021. What that means is that we're going to have a smaller calf crop in 2022. And a smaller calf crop in 2022 would generally mean higher prices. And so we're probably looking at a 2 to 3 year bull market, probably closer to 3 year bull market, or higher prices than where we are today in the cattle markets. Beef production, pork production, broiler production. Beef production is up nearly 4% year to date. Um, we were higher than that. If we'd have gone back a couple months, you saw where beef production was up 5%, or relative to the previous year. Uh, Part of that has to do with here we've got more slaughter, but we've reduced weights of cattle pretty significantly. We've actually we're getting what we call current in the feedlot, and a lot of those animals that had been backed up for so long, we've moved them out. We're finally working through all these animals, and that's another thing that's creating leverage for the cattle feeder. Pork production and broiler production down marginally. There's so much meat out there, no shortage of meat in the United States. Uh, Key is that we have really strong domestic demand, which coronavirus proved that for beef, no doubt, and we have consumers that continue to uh, be strong buyers of beef at retail and restaurants. We're going to continue to export this stuff. There's you a picture. Uh, we don't see those moving in and out of ports very quickly right now. But the thing is you never know about China. Um, they're a major trading partner. They're a major consumer worldwide. But you never know about them. It's like yesterday. There were reports yesterday about how they think the Chinese are going to they're planning a secret nuclear attack on the U.S. Well, I mean, either you're a friend or you're a foe, or you act like you're a friend and you're really a foe. Who knows? So if that's if that's the underlying political aspect, how does that influence our exports of any products to China, if that's the animosity that comes into play? So you just never know with China is the point. Uh, Japan and South Korea continue to be really strong markets for beef, and we continue to do business with Mexico and Canada, which is positive. Uh, just to briefly show you how strong exports have been relative to a year ago, I mean, just super strong. We're pretty much a net exporter of beef right now. I'm going to back up into imports, and we've actually had pretty strong imports as well. But strong imports, strong exports, all of that is telling us how strong demand is for beef. The imports, generally a lean grinding beef product, um, but that just proves to you that domestic demand is very strong, because we are marketing high valued cuts domestically that that we can't keep on the meat counter. And then we're importing a lot of beef that we also is being consumed at a very rapid pace. So we have strong demand uh, for beef. And then, like I said, internationally, we have strong demand for our beef going outside of this country. And the three major players right now are Japan, South Korea, and China, which can be seen. That's imports, but there's the exports, which can be seen right there, as you see where Japan being the green line, South Korea being light blue, and China being red. Um, so major players, a lot of beef going in and out. It's amazing how strong wholesale beef prices have been this year. Uh, we've been sitting above this $300 level for so long, so much of the year. Hadn't been below $2.50 since late March. When I first started this job uh, in 2012, the major resistance point in wholesale box beef prices was $200 or $2 a pound or $200 per hundredweight. And as you can see, in the past 2 years, we haven't been below $200 per hundredweight. And so it kind of start to question, is maybe 250 the new floor? Ever since we broke through it back in April or late March and early April uh, for 2021, is maybe 250 the new floor that we don't ever go below for wholesale beef prices? I don't know if the answer is yes or no, but so far this year, having the 7 or 8 months that we've had trading at that level, it sure well could be. And at the same time, you'd say, well, maybe 350 is a ceiling that or a resistance point that we're experiencing, as we can see through this graph, that we can't push past 350. If you look back at 2020, that was at the height of the coronavirus uh, pandemic and not being able to get enough product to store shelves. So that's a little anomaly, but anomalies do occur. Drought, terrible in the West, continues to be terrible in the West, but we're in really good shape. It's amazing. We talk about input prices because, uh, the primary inputs that we're looking at are fertilizer and fuel uh, and feed. And we know corn prices are pretty strong, which means feed prices are going to be high. We know fuel prices are high. We know fertilizer prices are high. But fortunately, we've had a really long growing season in Tennessee, and we've been very fortunate to have good moisture, good temperatures, to continue to see good fall growth in our pastures, and hopefully we have some producers that are going to be able to take advantage of that and maybe save a few dollars in their hay costs this year because of these favorable conditions. And I guess hopefully those conditions persist to some degree, because we're definitely gonna struggle for profitability in 2022 uh, if producers are forced to pay and have to pay current fuel and fertilizer prices and feed prices. Um, it's going to be a tough row to hoe to make a profit. Sure, cattle prices may be higher in 2022 than 2021, but these costs are going to outpace input prices are going to outpace output prices. The latest data out of Kansas showed where the cost in feedlots were $1.10. We're going to start to slowly see these decline If I back up again to corn prices, I mean, the cattle that were coming off of feed in September uh, saw the peak of all these prices, of these feed prices. So we'll start to see as we move throughout and see the cattle that come off of feed in October, November, and December, we'll probably start to see these closeout feed costs decline, because we've seen a pretty sharp decline in feed costs relative to where they were 6 months ago or 7 months ago. That's a good thing, but at the same time, I don't know that we can expect the cattle feeder to pass on just a whole lot of their margin, as their margins are positive, but not huge, and they've been squeezed for quite a while by the packer. Just very quickly, show the January feeder cattle futures trading at 159.27 yesterday. Um, I think there's some more upside in that market, but I don't know that we, to push over 160 and push back up towards 162 is going to be difficult. I guess we all wish we'd have hedged January sales back in August when they were trading at 170. And then show May here. I'm sorry, April here, and showing where there's trading at 163. And if you look as far into August, September, and October, we're trading in the low to mid 170s on feeder cattle on the futures market. Aaron made a good point on needing to manage some risk in crop sales for 2022. You know, the he gave you an expensive option and an inexpensive option. And right now, if you're looking at December corn or you're looking at August feeder cattle, uh, a lot of that cost on those high cost options is just time value. It's the fact that they're so far out. There's a lot of cost because there's so much uncertainty over that much time. So, for some people, it may be appropriate to go ahead and hedge output prices today for August, November, December of next year. And for others, it may be wise to sit tight for a little while, because if the futures market price does not change, technically the value of a specific option should decline as time passes. But it is good to try to put a little pencil to paper here and figure out what your cost of production is, whether that be crops or cattle, and know what you're going to have, what kind of price you have to receive to make a certain profit or profit goal. So fed cattle price forecast, I'm probably a little low on January through March for fed cattle. I think that they may be a little higher than that, but I'm trying to be conservative here. April through June, I think there is a good chance that we'll hit a week or two of 140, but we're still probably going to have an average closer to 136 on that, 135, 136. But overall, pretty good prices. And then here's kind of the thoughts moving at least through into the spring, into April, and May would be very similar to April if you go into May, but that gives us a 6-month outlook on what we think prices will be for yearling type steers and heifers and weanling steers. So things are looking really, really good for some of the fall born or late summer born calves if people move them in March and April, as we do expect grass to be pretty plentiful given the climatic conditions we've been having. So with that, I think there still are some opportunities for stocker cattle. I think a profit could be hedged today if you know what your input costs are going to be. CowCalf profitability is really going to depend on all inputs. I have corn prices, but it's really all these inputs, and it comes down to how much how heavily stocked are you in your pastures. And this would be a good year that being understocked may not be a bad thing, because I'm not sure you can afford to fertilize all your pasture, and you can't afford not to fertilize your hay ground. Um, but it's going to be really, really tough to pay those high nitrogen, potash, and phosphorus prices uh, to produce what's really a low value product as it is. But I still do see a potential bull market for the next 2 or 3 years, and we'll just have to see how uh, these transportation issues get worked out and getting product moved here, there, and yonder.